What's up, guys? It's Stars right here, back again with another video. It's just another day. I'm gonna be showing you, taking you into a chat, showing you a couple of videos, and just talking a little about trading. It's not really gonna be a week in my life, just a little bit of advice, chat time, etc., etc., etc. You know what? Let's get on with the video. When they talk about losses in trading, you know that it's common knowledge that losses are normal. To be a trader, you must be a loser. The best loser is going to win. Ability to take losses is what's going to make you a great trader. It's normal, yeah. We all know that, and it's very important for you to know that. Yeah, it's not just don't trivialize it. You can take 10 losses in a row, depending on your strategy, depending on your edge, or your win rate. Just know that okay, it's possible for you to lose. You're thinking about the long-term perspective, not the immediate, right? However, when it comes to losses, losing trades, there's a way you can minimize your losses by taking only your A plus setups, right? If you're just taking losses randomly, then you're believing that okay, it's normal. It's normal to take losses. It's normal to take losses. You're going to keep losing, and in the end, you might not be a successful trader because the losses you are taking are not according to your plan. You're just taking random losses in the market. You're just pressing the buttons and ready to, it's a losing game. Let's just do this. You're gambling basically. Either you lose or you win, right? So some of the trades I took this week, there were very unnecessary losses. Like some of the losses I took this week, rather, there were a lot of unnecessary losses within these losses. And if I'm going to count my necessary losses, my valid losses, it's going to be like theory. However, I had like 11 losses, and majority of them, as you all know, were unnecessary losses. Why? Losses that were taken outside of my plan, outside the kill zones, against the trend. And this is something that we keep fighting with, we keep battling over and over and over again. This week you can stick to your plan and have a killer week. Then the ego gets into your head. The next week you go and do the same thing. You say, okay, last week I killed the market. Then you forget the exact things that you did that means to kill the market. And you just start trading. It's a constant battle. Trading is a constant battle within yourself. You fighting your inner self, your ego, your greed, your indiscipline. You just keep fighting, 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 and the more you fight, the more you let me say progress, right? And if you are making conscious efforts to better yourself, definitely you're going to progress. Remove the P and L, the profit and loss from your mind, and just trade, right? Just follow the plan, just do what is necessary. So today in the market, this week in the market rather, there were a couple of losses I took that I'm not so proud of. Going back looking at the charts, I don't know what prompted me to take those losses. The signatures in the market that I always look for before I take a trade, I didn't see them, but just the urge to trade during these my sessions, when it's London session, the London kill zones, the New York kill zones, I'm seeing that okay, the market is active. I'm looking for, let me get into a trade, let me make money, let me do this, let me do that, without waiting for the exact setup, the exact signature in prices, the market makers tipping their hands to me to tell me that okay, this is what we are going to do for me to capitalize on, without waiting for these few things. And I just take these losses. It affects my psychology. The profitable trades I'm going to take that I'm supposed to hold longer because I don't want to, I'm scared of the trade going back against me. Then I close the trade prematurely, and then the trade goes up. Okay, coming to the new week on the 4 hour, we could see that obviously we are in an uptrend. We have been in an uptrend for some weeks now, right? So this blue line demarcates the Sunday of the opening week, right? So let's drop down to the 1 hour, and we can see that price is respecting, creating higher highs, higher lows, higher. And you can see some of the losses I took. Yeah, I know there are a lot, but trust me, it's not as bad as you think. Let's get on with the video, right? So on the 15-minute time frame, this is my execution time frame. Monday, coming to Monday, I saw this, and you can, if you look, if you have been following this channel, you can see why I took this trade and why I took this loss, right? Looking back to these areas right here, I didn't see any PDRE, so I was working solely on this price action right here. So in the New York section, I can see that there was an impulsive break of structure to the upside right here. Market structure shift, and then I drew out my order block, which is this last candle before the move up. Is the way I be trading normally. I placed my order, took a limit order, and you can see what price did. Price came, took me out, took out my 3 pip stop loss, 3.3 pip stop loss, and then flew in my direction to take out these equal highs right here for a 4.61 arrow trade. So that was my only trade for that day, and it was a loser. Then going into Tuesday, second day of the week, the same setup presented itself, right? I saw accumulation in the Asia session. You can see right here, this is an accumulation consolidation, right? So then, but this time that I now saw an order block behind, right? A place where price could drop down, take liquidity from before going higher. Then the same setup presented itself, the same fake move. Let me take this out, right? In the, obviously, this is the London session, right? So price rallied, book structure to the upside right here. And if I decided to trade the same way I traded the previous day, I would have what? Put my order right here, this order block, expecting price to tap it and then go to the upside. But then, because I saw this order block from the past right here, I knew that price was going to trap those early buyers. So I waited and I took my entry after price took out this low. After price took out this low right here, price tapped to this other block and I took my entry right here. I think how many pips stop loss? I think it was, yeah, just put my entry right below this low, 2.5 pips stop loss, targeting what? The top of this consolidation. But then I saw the price action was looking so beautiful, right? Then I took another entry. And this entry, originally, I targeted as high as this for my take profit. Right? But at least this was the trade I talked about that I closed earlier around at 4.5 arrow. And I just took these two trades and that was the trade for Tuesday. It was a winner. Coming into Wednesday, I saw this price action and I expected price to fall a little bit, maybe towards these areas like deep discounts. Price has rallied from this region. Sorry about that. Price has rallied from this low to this high. I expected price to go back into discount. It did, right? It did, but it took me out first. So this was a counter trend trade. I wasn't supposed to be taking this, but it was what the price action presented to me. And if you know the way I trade, you can see that there was a liquidity grab around here. Price rallied up, tapped into this other block right here, broke structure to the downside, returned back into another block right here. So I just took this trade. This is a valid trade actually. Looking back at it, but it's just that it's against the trend, and it was supposed to be a non-trading day or if I had decided to go pro trend, I would have taken a loss. So this is like a canon event because I would have taken this other, what is it? Okay, I would have taken this setup right here. If I had missed that one. Because this is the same thing. Expecting price to break structure and continue to the upside. Price broke structure, yes. Left behind another block, yes. But then liquidity grab. Price this week would have taken me out, and that would have been a loss. That was a day that I could not really avoid. That was a loss I could not really avoid. So going into this new day, you can see that price fails to break this high, and instead it broke structure to the downside. Okay. So I thought that because of these weeks below here, this week you can see here, I thought that this was just a liquidity grab to continue going higher. So I decided to take a buy, and you can see that was the day price decided to go lower. Price kept breaking lows and kept on going lower. After price went lower and took out this old low, slightly, right? Just slightly taking it out. I was confident that we are going to go back up. We are going to fly higher, continuing the uptrend. So I took this trade around here. The problem with this trade was that it was not in my kill zone. Let me show you my kill zones. You can see it's outside the New York session. Then I was supposed to put my stop loss below the structure low, but then I didn't. I just kept it here. And it was as if price knew exactly where I kept my fucking stop loss, and price went, tapped me out immediately and reversed. And guess what happened? Boom. This would have been a 3-hour trade. If I had just taken my stop loss below the structure, this is a swing low. So that is something for the journal. That's something to learn, something that I would have improved upon. Sorry about the roughness of the chart. This blue zone you see is the Asia session. The first dark zone is London kill zone. This is the New York kill zone. And this is just an EMA. This is a moving average 200 EMA. It's just there for aesthetics, really. That's just there for aesthetics. I'm not gonna lie, I don't really use it. I can determine the trend without a moving average, but I just use it. Then this was the trade that okay. Chair Fed chair speaking, yeah. The Jerome Powell trade. This was Friday, the last trading day of the week. Coming to the markets, I saw that price was basically okay. My network was terrible on this day, right? So I didn't come on. I didn't come online on time to see what the market was doing. But I would have taken this London trade. This London setup was beautiful. If you really observe, you can see that all my trades are similar, right? This would have been the setup I would have taken, right? Stop loss above this structure high, targeting where this low. This first low is 2.98 arrow, but I know I would have targeted 3 arrow for a fact, or possibly even here, but I don't know. I didn't take it, so I cannot really see what I would have done. Maybe I would have made an error and lost the trade. Who knows? But what I'm saying now is that then I came to in London, New York session, right? Look at it. Inside the New York session, I saw this setup. I took this setup and I targeted 5 arrow to take out this low. I should have done that because Fetcher, Jerome Powell was speaking. So price got to 3.5 arrow. I should have closed it at maybe 3 arrow right here. And then what did we see? Price spiked up to the upside, taking me out at break even because I cannot let price go 3 arrow in my direction and I will not set break even. No, that's not good trade management. Once price goes 2 arrow to 3 arrow in your direction, learn to set break even because it'd be a shame if price gives you profit and then comes and takes you out in a loss. It's better gives you profit then comes and takes you out in little profit, right? It's all about money management. It's all about protecting capital and protecting your account. So this was a break even trade for me, and from what I can see, this uptrend is continuing. That is all that happened on Euro Dollar. I took other trades on other pairs. I traded GU, right? I took some trades on GU too. You can see this was a winner. This was a loser. I don't trade GU too much. I trade GU. I actually trade GU, but I not really traded too much this last week. You can see that zone coincided with a 4-hour order block. If I go up, you can see a 4-hour order block right there. Clearly, right? So basically, the uptrend continues. Then on this USD CHF, I'm in a swing trade on USD CHF, and I've been on this trade since on Monday. I took this trade on Monday, and we are still headed down. The take profit is just 40 pips away, so it's a nice 6.48 arrow trade. So despite the losses and everything, you can see that this trade is still looking nice. I just use USD CHF for swings most times because sometimes I can get the larger movement. I think I got a higher one here one time. I can't really remember exactly which leg, but this one is another one I'm expecting to hit take profit maybe Monday or Tuesday, and we'll start the week with a head start, right? So that is it for the market review. Okay, yeah, so that brings us to the end of this video. Thank you very much. If you watch until the end, please remember to like, subscribe, share, leave a comment in the comment section if you relate with this video, if you learned a thing or two. So the next video is going to be uploaded next week, obviously once a week, so please keep that post notification on so anytime I upload you can be notified. Helps the algorithm and all of that. So thank you very much for staying at the end of this video. Until I see you once again, AB Styles out.